Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is May 22nd, 2013. I think after today's action, it was definitely worthy of a video, so I decided to create a quick and dirty video after today's action, and I just wanted to inform you, if you haven't seen the previous video, please go see it now before watching this one, because a lot of what I'm about to talk about I've talked about in the previous video. A lot of the drawings here looks like it has been deleted, so let me just load it up here. Alright, so in the previous video we talked about this this upper trend line. Okay, never mind, I'm sorry. We talked about this trend line here. Okay, we also talked about the 165.80 level. This was the mathematically calculated level, which held up for, unfortunately, just one day, but it still held up. So as long as it holds up for a day, you're gonna be pretty sure that it's gonna be served as support eventually, and that's what actually happened today. As you can see, the candle here closed right on 165.93, which is about 13 cents off. So basically, the reason why I'm making this intra-week video is for a couple of reasons. As discussed in the previous video, I did expect resistance here at this upper trend line here, right? And any close above this upper trend line will constitute a stop out. Now, what happened was we created another doji candle yesterday, and this doji candle went right into this upper trend line. I mean, it's almost picture perfect. A short was initiated, and then today we broke through this upper trend line. And in the previous video, I did mention that a lot of game playing, a lot of manipulation out there. But in this case, it'll be because Uncle Ben spoke at one of the conferences today, and he basically said that he's not going to stop printing money. So we broke through this upper trend line. Later on, Uncle Ben said, oh, well, you know what, maybe I'm not going to print as much as I would have liked to, or maybe I'll stop printing. I don't know what the deal is. Again, my videos, as you guys all know, are purely technical. So I did mention that a lot of times there's going to be a fake out. Whenever you see a breakout of an upper trend line, there's going to be, that's a lot of short squeezing is how the word is, meaning a lot of institutions will drive. Everybody knows people are going to be shorting around here. I explained that in the previous video. A lot of people will be shorting because I'm not the only one that sees this trend line over here that goes back all the way back here. If you look at the weekly chart, just rewind to the previous video so I don't have to make this video so long to explain it. In any case, intraday, we opened here, we broke through this upper trend line, and then we ended up just screaming down, closing right on the 165.80 level. Now, why is this so significant? Well, it's simple. This is a doji candle, which means a reversal. Okay, this upper trend line here also is resistance. What pattern did this create here? This pattern right here. This is, in my definition, considered an engulfing candle, two candle pattern. Normally the body of this candle would have to engulf the whole tail of the day before's candle, but my engulfing pattern is as long as this body here engulfs the previous day's body. So in my terms, this is an engulfing pattern, and you guys all know what I am, how I trade. I trade a lot based on volume. This volume was just unbelievably high. Not really high, but high in relative terms. We didn't get a volume like this until it was, let's see, the last time we had volume like this was February 25th, when we had this big drop over here, and everybody thought that we were going to head down. At least I was one of those people who thought we were going to start heading down over here after this candle hit over here. I mean, nice engulfing pattern, right? Well, I know I explained to you in the video we need at least 3 up candles first for this to be considered an engulfing pattern, but it wasn't. And we found some support right at the 149.51 level before heading higher. So what I'm trying to say is, even though this is an engulfing pattern on beautiful volume over here, just keep in mind that this is definitely, on technical terms, a reversal pattern, but doesn't mean that the manipulation in the market, meaning Uncle Ben comes online tomorrow and says, hey, by the way, just kidding, I'm gonna print $100 billion more dollars, or a few trillion more dollars, just so he can prop the markets higher. Again, this 165.80 level is acting as support as of now. So do I say go long? Definitely not, because we're overextended. As you all know, I'm not bearish, but I will initiate shorts more than I will initiate longs. And right now I would not initiate a long. Partially, probably because I've already shorted at this level over here. Again, my stop out would have been a close above this upper trend line here, and it has not done that. But after today's action, what that has allowed me to do is already put a break-even stop. So like these previous days, I had a break-even stop. Tomorrow I could get easily stopped out break-even, not a big deal. I just stay in cash until the next shorting opportunity. Now, on a technical basis, and again, with the way the markets have been reacting, with the way the markets has just been going straight up like a rocket, there's no guarantees, obviously, and it's even less of a guarantee, even though you have the patterns. But as I see it, we have resistance here. Again, we have the engulfing pattern on high volume. This is definitely an indication, in my opinion, that we may start heading lower. Okay, at least I would at least think we would at least get into the 20 moving average, and then from there we can see if it's going to close below it or if we get a bounce off of it. Right now I don't see the 165.80 level holding that well, but again, you never know with the manipulation in the market. But purely on technical terms, this is a reversal signal, and I would have to think that we may start heading down. Now, do I think this is going to be the start of the correction? Not until I see lower lows and lower highs, at least one lower low and at least one lower high, and then that will tell me the trend has changed, and therefore the correction may have started at that point. But until that happens, the trend is currently up, and there's nothing else telling me otherwise, and therefore I'm still not going to go long because we're overextended. But what I'm trying to say is I am not saying that this is going to be the start of the correction yet until the pattern proves itself. I'm not going to speculate on terms of the point where it looks like it might start, because of a two pattern candle here on high volume doesn't mean anything. All it means is we may start pulling back into the 20 moving average before starting to head higher. But I'm a short-term trader, so when we get to the 20 moving average, if we do get to the 20 moving average, then we'll just take it from there, and I will update you if anything changes after that. Okay, so this is your intra-week update. I hope your trading is going well. I hope everybody's making a lot of money. And I wish the best of luck to all of you. God bless, and I hope to see you in the near future, which is in just a couple of days. It's already Thursday. Anyways, I hope to see you in the next video.